Right now, the US Treasury bill is currently giving around 5.5% return. At that return, it easily beats many of the other similar safe investments that we have right now, such as Singapore T-bills, fixed deposits, and even money market funds. In this video, I will talk about all the important things that you need to know before investing into US T-bills, like what it is, how it works, what are the tax implications, risks, and when you should consider investing in them. Finally, I will also show you a step-by-step guide on how you can invest in them. Alright, let's first understand what the US Treasury bill is about. In simple terms, T-bill is a short-term bond issued by the US government, which obviously is the greatest country in the world. T-bills have a maturity of anywhere between 4 to 52 weeks. Besides T-bills, there are also many other kinds of government bonds. For example, Treasury notes, which have a slightly longer maturity date of between 2 to 10 years. Treasury bonds, which have a super long maturity period of 20 to 30 years. Then there's floating rate notes, tips, and strips. But for this video, we'll be focusing on just T-bills. So how does T-bills work? If you check online, it will say that T-bills are issued at discount from the par value, also known as the face value of the bill. If you are new to this, you'll be like, they are speaking the language of the gods. So here's an example to show you what it means. Let's say you buy a T-bill at $10,000. The return, or also known as the discount rate of this T-bill, is 5%. This T-bill has a maturity of 52 weeks. When you buy this T-bill, you only have to pay $9,500, which is $10,000 minus 5%. So this is what issued at a discount means. Then when the T-bill matures after 1 year, you get back the $9,500 that you invested plus an additional $500, which is the 5% return of your investment. The good thing about US T-bills is that it's virtually risk-free because they are fully backed by the full faith and credit of the US government. And so far, the US has never defaulted on their debt other than the few times where it almost did. But that's not the point. The point is, T-bills are extremely safe and you will always get back your money unless there's some catastrophic event like a nuclear war or an alien invasion. Then there's a different story. When investing into T-bills, you will know exactly how much the return is and how long your money will be locked up for. This is extremely good for people who are looking to park their money for the short term. Like maybe you're saving up money to buy a house 6 months later, or you are preparing for your wedding. Rather than investing the money into the stock market and get a mini heart attack when the market crashes, T-bills will give you a safe and predictable return. However, there's one thing that you need to know. While the US T-bill is extremely low risk, if you aren't from the US and are investing into US T-bills, there's Forex risk involved. For example, over the past 1 year, the USD-HGD currency pair has declined by almost 10% from its peak. However, going forward, many analysts are forecasting that the USD will remain strong due to its attractive interest rates and its safe haven status during periods of economic uncertainty. The other thing that you need to take note of is taxes. One, if you are from the US, you will be subjected to income tax at the federal tax level. But if you are from countries such as Singapore or Malaysia, where there's no capital gains tax on investment returns, you won't be taxed on this. So do check your local law to make sure. Second, dividend withholding tax. This only applies to non-US investors. The good news is that because US T-bills don't pay out any dividends, there's no dividend withholding tax here. Finally, estate tax. This is also known as the death tax, where when you pass away, they will tax your assets. It's no longer your assets. It's your descendants' assets now. But good news again, US Treasury bonds are exempted from estate tax. Though, take note that if the debt has a maturity of 183 days or less, which does not pay interest, it can be subjected to estate tax. There are two ways where you can buy US Treasury bill. The first method is through Treasury Direct, though this is only for US residents who have a valid social security number. If you are not from the US, another way is to buy via stockbrokers such as TD Ameritrade and Interactive Brokers. But for this video, I'll just show you how to buy through Interactive Brokers. First up, make sure that you are able to trade US bonds. To do that, at the top, type in permission and choose Request Trading Permissions. Under Bonds, choose Add/Edit. Here, make sure that United States is ticked, then click Continue. And tada! You now have permission to trade bonds. However, if you run into an issue where IBKR don't allow you to trade bonds, here's how to fix it. At the top, search for Configure, then choose Configure Financial Information. For income and wealth, you can choose something similar to what I've chosen. Don't worry, IBKR won't be doing any checks here. Click Continue all the way and you will come to this page. For bonds, you can choose 2 years of experience and 1 to 10 trades per year. Then select Good Knowledge. Click Continue and you have updated your financial profile. Then just try requesting for trading permissions again. Once you are done, you are now ready to buy bonds. At the top, click on Research, Bond Scanner. Choose US Treasuries. For the maturity date, just enter the date range of the bonds that you are interested in. For example, I want to invest in bonds that are 6 months away. So let's try somewhere in December. Scroll down and click View Results. Here, you will see all kinds of bonds, but the ones that you want are UST government bill. Here, I want to explain a few things. Similar to stocks, a bond also has a bid and ask price. Bid just means what's the highest price a buyer is willing to pay for a security, and ask is the lowest price a seller is willing to sell the security. Then, based on the bid-ask price, IBKR will just auto-calculate what's the current yield of the bond. Also, this yield that you see is the yield for 1 year. Meanwhile, this bond only has a maturity of 6 months. So one easy way you can tell how much is the yield is to look at the current price of the bond. So you take $100 minus off the price divided by the price multiplied by 100 and you get the yield, which is 2.46%. This is the return that you will get if you were to invest at $97.60. Okay, let's try this bond. Click buy. Here, you will see that it says 1000 face value. One easy way to understand this is to add a 0 to the price. If it says 97.82, after adding a 0, it will be $978.20. So if I click preview, you will see that I'm buying at the ask price plus a 0 behind it. As for the fee, it's anywhere between $5 to $7.50. But in most cases, you'll be paying a 5 USD minimum commission unless you are some rich boy and is planning to buy over $1 million worth of bonds. When you are ready, click Transmit Order. What's this? Don't worry. This will happen if you are trying to buy the bond outside bond trading hours. Trading hours for bonds typically start at 8 AM to 5 PM Eastern Time. Or if you are from Singapore, this translates to 8 PM to 5 AM Singapore time. Once you have bought, you'll find your bonds in your portfolio. Here it shows minus 5.18 because as mentioned earlier, there's a $5 commission fee for trading bonds and bond prices will change as time passes. So that was a quick tutorial on how to invest in US Treasury bonds. Hopefully you find it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.